Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our two-day Metals and Mining Conference. Our next presentation is from Liberty Gold. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome our next presenter. He's Jon Gilligan, President and Chief Executive Officer of Liberty Gold, which trades on the OTCQX Best Market under the symbol LGDTF and on the TSX under the symbol LGD. Welcome, Jon.
Thanks very much, John. Really appreciate the opportunity to be here today, and thank you very much for OTC Markets for providing us this slot. My thanks to everyone who's online. What I hope to share with you, and what I hope you'll take away from today's kind of half an hour together, is what does a compelling oxide gold development story focused in the US look like, and what are the opportunities? Liberty Gold is bringing the Black Pine deposit back into production. It was producing in the early 90s. We've done extensive exploration and have major discovery success. And we're now moving that asset through permitting, through development, into a construction decision in under 3 years. So it's an exciting story, and I look forward to sharing that with you over the next 20 minutes. I will be making forward-looking statements. These are the cautionary notes. Please read them at your leisure. Liberty Gold is the third reincarnation of a group of people who have extremely well-defined record in gold discovery in the US, and a team of explorers coupled with mine finance individuals. Their key claim to fame would be the discovery of the Long Canyon deposit, and its subsequent sale to Newmont. That was when it was called Frontier. Frontier evolved into Pilot, and now it is Liberty Gold. And we have recently, if you've been following Liberty Gold at all, added a significant bunch of technical individuals to the story. We came out with a press release recently. We have put in 3 strong technical individuals as an owner's team to take the Black Pine deposit through feasibility and into a construction decision. And we've also added a second resource into our US permitting team to bolster that permitting capacity to help us drive through the US NEPA process. We like the Great Basin. We understand the geology. We like the US as a tier 1 jurisdiction. And we think Black Pine is a premier deposit in that jurisdiction, one of the very few large-scale oxide gold systems still held in the hands of a junior. Company information on the right-hand side of this slide. We've got 450 million odd shares outstanding, 20 million US in the bank at the last reporting. We have 44% institutional support, and that's long-term support from the well-known senior players in the business, the Van Ex, Franklin, Merckx, Conwave, Amati, RCF, and Wheaton Precious Metals came into the register about 18 months ago now. They hold the only royalty on Black Pine, which is a 0.5% royalty, and Liberty has a 50% buyback right on that. So the financial metrics that you can see on the left-hand side, which is the high-level results of the pre-feasibility study, which I'll go into in a little more detail in a moment, there is a 0.25 point royalty on that asset underneath those financial numbers. That is quite an unique position for this style of asset in this part of the world. We think that presents tremendous upside opportunity as we take this thing into the end of feasibility and start to look at project finance and financing for construction. Next slide, please. This is the team. There was recently a change of CEO. I took the CEO role about 6 weeks ago, and we had a rotation of the chair. Greg Etter is now the chair. He is a senior executive from Kinross in the US with deep US experience. The latest addition, other than the three that I mentioned, would be Matt Zietlow to the management team. He came on a year ago. He is a NEPA permitting specialist and has had the opportunity to take a number of leach operations through the full NEPA process. Well known in Nevada, experience also in Utah and in South Dakota. He previously worked at the Marigold mine, where I met him when I was with Silver Standard, as it then was, which purchased the Marigold mine out of the Barrick Goldcorp JV in late 2013, early 2014. So I've known Matt for a while, and he really is deeply experienced in understanding how to get these things efficiently through the what appears on the face of it to be quite a complex permitting process. But we think we have a unique position in that. Next slide, please, Susie. This is where Black Pine is, right on the southern border of Idaho, adjacent to Utah, on the margins, on the flanks of the Great Basin. Many people, when you say Idaho, think pine forests, mountainous ranges, elk, salmon, streams, trout. This is not that part of Idaho. That's northern Idaho. We are in the southern part of Idaho, which is very, very similar from a landscape point of view to Nevada and parts of Utah. It is an arid landscape, no surface water in this area, and a particularly good place to find and develop a mine. We've got some key things going on in the company over the next year. We've gone through a pre-feasibility study for Black Pine, as I mentioned, submitted the mine plan of operations in the early part of the year. That starts the NEPA process, and we're now in that completeness review. We commenced feasibility study field work, so we have drills in the field in the second quarter, doing preparatory field work in anticipation of commencing a feasibility study in Q4. We brought the technical team on board, as I mentioned. That's done and they're in place. I think we will get to a feasibility resource update by the end of the year, ahead of starting full feasibility engineering. We also announced earlier this year the spin out of the Goldstrike Antimony Ridge asset there in southern Utah. I'll talk about that at the end of this presentation. Turning to Black Pine. Black Pine is a previously producing site. It was mined in the 90s by Pegasus. It was an open pit run-of-mine heap leach operation. What does run-of-mine mean? It means no crushing and no conveying and no agglomeration. So it's an open pit mine. You load the ore into a truck, the truck deposits it on the leach pad, and you leach immediately at that grain size. Very simple, very low cost, very effective. And the process that we are going to use, run-of-mine heap leaching, as I said, is exactly the same as the process that was fully permitted for Pegasus to use in the 90s. So we're doing exactly the same thing that was done before, and we think that gives us a significant advantage. It is a previously disturbed site that has been remediated, but we do see evidence of mining, and we are, philosophically going to go back in and reopen that, and ultimately we will close that site out under modern closure requirements. So we will end up improving that site long term. We put a lot of effort early on in the game when we were drilling and discovering to de-risk the project. So we have, before we finished pre-feasibility, we have all of the water rights that we need from the adjacent sub-basin. And importantly there, no new water extraction from the basin. This is groundwater that's currently being used for agriculture, and we will repurpose that for mining and then repurpose it back to agriculture once we're complete. There's power to the front gate, and we have a supply agreement for all the power that we need already in place. From an environmental perspective, this is a very environmentally straightforward site. I mentioned there's no surface water, so we have no wetlands, no streams, no jurisdictional waters, so no Army Corps of Engineers permit is required. We have, when the open pits are all above the water table, so we have no pit dewatering, no pit lakes, so none of the pit lake chemistry issues that others have. We have no ARD issues associated with rock storage facilities. Very positive in general across the board, no threatened and endangered species. And, we see this as a very straightforward permitting process. The economics are attractive, it all comes from a significant resource. Thank you, Susie. Next one. We're looking at 5 million ounces, just under 5 million ounces in the pre-feasibility resource. That is growing. We have, as I mentioned, we have drills in the field. We see that as a point in time. We've drilled the sort of the core of the surface mineralization. There are additional exploration targets peripheral to those that are permitted, and then another set of targets peripheral to those that are still unpermitted. That 5 million ounce resource generates a reserve of 3 million ounces, which leads to a metal production of 2.2 million ounces over its 17-year life. The driver, the economic driver for this deposit is just under 2 million ounces at a gram above a 0.5 cutoff grade. And that material really is driving the economic outcome. And the lower grade material that encases those well-defined high-grade cores really helps us to reduce the strip ratio and provide a significant volume of mineralized rock on which to build a long-term mining opportunity. Next, please. So these are the economics that came out of the pre-feasibility study that was published in October. As I mentioned, 17-year mine life. The production, 183,000 ounces a year for the first 5 years average, 135 for life of mine. Really quite competitive all-in sustaining costs, just over 1,200 an ounce for the first 5 years, rising to just under 1,400 for life of mine. This is all on the basis of we think, a fairly modest initial capital at 327. And because of that earlier higher grade material, we get a fairly nice IRR, 30%, and a 3-year payback for a just over $500 million NPV5, all at $2,000 gold, which was at the time in October last year seemed to be a perfectly reasonable price to use as a base case. Of course, today the world is evolving. Gold has a very different complexion today. And what you see in the lower set of numbers is a significant financial leverage to the metal price. And to sort of summarize that, for every $100 movement in the gold price, we get an approximate $100 million increase in the NPV of this project. So these lower grade run-of-mine, low-cost oxide deposits are simple to operate. They are cheap to build, and they have huge upside leverage to a rising gold price environment. And we think this is absolutely the asset of the moment, as it were, and will shine at all gold prices above about 1,600 gold. So lots and lots of flexibility on this type of asset for the gold price, and lots of upside opportunity in terms of value of this deposit. This is what it looks like. The blue line on the right-hand side is the I-84 Two hours south of this image is Salt Lake City. An hour to the north is Burley, and about an hour and 15 minutes Pocatello, and about an hour and 15 Twin Falls. So it is right in the middle of not a lot Idaho. There is the nearest sort of dwelling is 10 kilometers to the north, which is a small collection of farmhouses and farmers who operate in the basin. The mine is obviously, the deposit is located in exactly the same place as it was previously mined. The discovery pit and the E pit and the CD pit are all existing pits that we effectively reopen. The range front is the significant largest new pit that we discovered in October 21 and have in that short period of time drilled out sort of 1.3, 1.4 million ounces in that area. A single large heap, you can see in the center of the screen, in a very nice, from a geotechnical point of view, a very nice, gently sloping, flat environment. So perfect position and location from a stability point of view. A simple site setup, a heap, a processing facility called an ADR plant, a truck shop for the mining equipment, and then the open pit. You can see the water wells I mentioned earlier. Those wells are dug and pumping right now, equipped and pumping. We will put a pipeline to the processing facility and then repurpose them. Excellent access. It's one of the easiest access development projects you will find just about anywhere. This is a very, very nice part of the world. Next, please. Production schedule, I mentioned 183,000 ounces a year for the first 5 years. You can see the left-hand side of that graph. That's the production profile. I think we peak at about 230,000 ounces with a little bit of a ramp to get there. That is the discovery pit, which is the pit sort of higher up the hill. And then we transition to the range front pit at the end, towards the end of the mine life, second phase of the mine life. We were able to increase the grade in the first 5 years by doing a pre-strip. So there is a $90 million pre-strip in the initial capital to mine through some of the low-grade near-surface material to expose high grade to give us that better feed up front. All in mining costs at a cash cost just over $9. That's going to be 10 or slightly under as we move into feasibility, but a highly competitive cost number. At $3,300 gold, 1 gram is worth $100. 0.1 of a gram is worth $10. So 0.1 of a gram recovered covers the 100% of our mining cost. So that's about a 0.15, 0.16 grams feed to the heap. So that's why these deposits can mine such low grade, because of that mining operating cost. What are we doing this year? I mentioned we're in the field doing the feasibility resource field work. The image you see is a grade image on drill holes. So the hotter the colors, the better the grade. Range front in the bottom right-hand corner. The yellow dots that you can see are drill hole collars targeted for this year. We have some 40,000 meters of drilling. And what we're really doing is we're taking that pre-feasibility resource and we are very specifically targeting infill drill holes to look at some geologic situation or a resource class upgrade, or answering specific questions that came up in that resource, in the pre-feas resource, that we wish to resolve in feasibility to allow us perhaps to change a pit design to make it a little more efficient, and to perhaps upgrade an area that was previously flagged waste, but in fact we think is mineralized. So very, very targeted 40,000 meters. We have 3 drills in the field right now operating, and a 4th is due in the next month. We also drilled, if you look center right on the historic heap, just below the words M pit, there's a 30 million ton legacy heap from the Pegasus operations that historic records indicate had some residual gold in it. We've drilled that with a 24-hole sonic drill program. We're receiving assays back at the moment. I think I can say that we're pretty pleased with what we're seeing in those assays. Once we have all of that information, we'll put together a press release. But I think the opportunity here, the thesis about drilling that heap was, is there an opportunity to dig that heap up and reprocess it on our heap? And I think as I mentioned, we're very pleased with the results that are coming out. So I'm hoping that should the final assays prove what the initial assays have shown us, that we will be able to get that heap into reserve, and it would provide, in principle, some early ore to the heap, which will just only help the metal production profile. Engineering profile, I'm sorry, last one. The engineering works. We've conducted bulk sample extraction. We've taken 3 out of 7. Those would be the large orange dots. And these are 30-ton samples that we will leach in 4-foot diameter columns, which is really the sort of the final feasibility test work to prove that we can get the recoveries we think we can get, or we've predicted we will get, at the coarser sort of run-of-mine, no-crush grain size. And there's some additional ancillary works to support those disciplines from geotech and from water, which will progress during the year. In terms of permitting, permitting is critical path for the project. As I mentioned, Matt Zietlow came on a year ago and really set off to get us into permitting in a time frame that meshes with the engineering studies. The lead agency is the U.S. Forest Service, so the deposit is on the U.S. Forest Service. Just to the right of center, you can see a vertical line. That vertical line is the boundary between the U.S. Forest and the BLM to the right, Forest to the left. Forest is lead, but we also have the BLM as a co-agency. And of course, we have state agencies who are responsible for a number of key permits in this area. So we have an interagency memorandum of understanding signed and executed that lays out the ground rules for how permitting is going to proceed. And we also have memorandum with the forest between us and with the BLM for cost recovery. So we're supporting the permitting process, not only as a proponent, but also, with our dollar to get us through that process. And that's been very, very positive for us in the light of some of the administration input over the last period. We have a strong relationship with the state and very supportive political connections and very supportive local community. This is an area where there's not a lot of economic development. And this mine, when it starts up in late 28, or early 28 actually, will really pump a significant amount of dollars into the local economy, and I think will provide a really interesting work opportunity for local farmers and families, and many see it as an opportunity for their sons and daughters to be able to have a decent paying job and live in the local community. So I think this is a really positive mine development story regarding the local community. Next one. This is our project timeline. The bar on the top would be the sort of the technical timeline. I mentioned we're in feasibility fieldworks. We move into the sort of the engineering piece, so that's mine planning and the actual final heap design and the process facility design. That'll be 26. We're scheduling finishing that in Q4 of 26. That puts us just over a year away from a permit decision, which means that it's a good time for us to think about ordering long lead items, particularly electrical and other, perhaps the mine fleet. targeting initial construction in Q1 of 28 for a 9-month construction period, which puts metal in late 28. The columns below that line show you the permitting horizon. In yellow on the left-hand side, that's complete. Mine plan of operations is in. The next and the key waypoint for us, or the key milestone, which we would anticipate in Q4 this year, is a thing called the Notice of Intent, third column in. That is the federal registration of the project and is the key milestone to allow you to start the environmental impact statement. We have a third-party contractor already approved and engaged and working. They're called Stantec. It's the same company that has participated in the 4 environmental assessments that we've done on this property over the last 8 years. Very experienced. We also have in the forest a full-time black pine permitting lead that is guiding the forest and also interfacing with the agencies. And that lady has also been our case officer for the last 6 years. So we have a deeply experienced team, both on our side, both on consultants and in the agencies, to move this forward to a draft decision notice, or record of decision, as it's sometimes called by the BLM, in Q4 27, with the final decision early Q1 28 for a build late Q1, start build late Q1 28. So we are absolutely off to the races. We have a clear view from a technical perspective, what needs to get done to get us into feasibility, what feasibility looks like in terms of tweaks from pre-feasibility. And we have a clear view around how we move through the permitting timeframe. Once we have a notice of intent, by legislation, it is 24 months to the decision. We have some expectation that we might be able to do a bit better than that, particularly given the tone and the content coming out of the administration and the guidance to the agencies around moving these things forward efficiently. So some upside opportunity, I believe. Next slide, please. So one slide on Goldstrike, Antimony Ridge. Goldstrike is a 1 to 1.5 million ounce gold oxide system in southern Utah. It's fairly well drilled. We issued a PEA on it in 2018. We do not have a water supply for this deposit. It's in a part of the world where water is in acute shortage. And we've been involved in negotiating a water discovery opportunity or a water exploration opportunity with the local district for a little while. In some ongoing negotiations, we hope to complete those in the medium term. While we're doing that, our focus moved back to black pine. But with the run-up in the antimony prices early last year and the whole constraint on critical metals, we had known there was antimony mineralization on the flanks of this system, so we went back in the field and sort of rediscovered Antimony Ridge that you can see on the right-hand side there. We pegged a bunch of ground around it, and what we have is what appears to be between a 2 and a 5 kilometer strike length of a siliceous breccia, so a quartz-rich rock formed as a result of crushing between the contact of a limestone and a volcanic unit that is carrying really quite high-grade antimony mineralization in a mineral called stibiconite, which is the oxidized version of stibnite, which is the standard sulfide mineral for antimony. There's no drilling down dip in this area. We have quite nice structural control, and we think we've got ourselves the possibility of a significant antimony deposit here. Given that, and given the focus on building oxide capacity at Black Pine, we decided to spin this out, and hence the announcement in February. We are in that process right now. And in parallel with that process, we're looking at other M&A opportunities that we can pick up and then put into the SpinCo as it forms. So we're looking at a Q4 decision on what that looks like, and please watch this space as we move forward. Next one, please. So Liberty Gold. Liberty Gold is a company that is migrating, evolving itself from an explorer discoverer into an accomplished and well-supported development company with a clear line of sight to a construction decision on a plus or minus 200,000 ounce per year producer, at least for the first 5 years, with a 17 plus mine life. The project is largely de-risked. It is technically very simple, open pit, run of mine, heap leach. And we have the team in place not only to complete the technical aspects, but also to take it through the permitting process. You will have seen from the economics, the pre-feasibility study, they really are exceptional. We are at current spot prices in excess of a $2 billion NPV5 after tax, and touching 100% IRR at that spot at the moment. We have front-end loaded the mine so that we achieve payback. Certainly at spot, payback is approximately a year, and we think there is opportunity to improve upon all of those pre-feasibility metrics at feasibility. Key catalysts for us going forward: finish the drill program, release the feasibility resource estimate at the end of this year, receive our notice of intent, our federal registry of the project, and then get into the EIS in the fourth quarter, which puts us under 24 months from a decision. This is a 5+ million ounce gold system in the US in a tier 1 jurisdiction that is the premier oxide development project in the US that's not held in the hands of a major. I think our share price does not reflect the intrinsic value of this asset. And I think we are poised for a re-rate as the market starts to realize not only do we have the skill set and the capability to build this, but that it is doable, it is inevitable, it will happen. And this is a fantastic investment opportunity. So in closing, we've built a team, we've got the asset, we know how to get there, and the objective for the company here is that Black Pine is the first of a series of oxide gold deposits that this company will build over the coming years. We're not just building a mine, we're building a mine-building company. And I think that's a phenomenally exciting opportunity. Thank you for your time, and I'll throw it back to Susie for questions.
Hi, John. I think we've run out of time. Our 30-minute slot is over. So just want to thank all of the questions that have come in, and we'll definitely follow up with you after the presentation. We've just got our contact information there on the slide, and look forward to engaging with all of you. Thanks very much for being here with us.